Hello again. I want to talk to you today about another healthcare company that I find intriguing and have purchased stock in. It's called Ontrack. You may have also known them by the name of Catasys. So Ontrack could be a little bit of a competitor to Livongo, who I previously talked to you about. There is some difference, though. Ontrack is specializing in mental health care, improving members' mental health, and by doing that, reducing their medical expenses for their health care. Now, Livongo does have a branch that deals with mental health as well, but you may remember that they also have some proprietary um, tools that they use to measure blood pressure and blood sugar, etc., that they analyze that data. So let's talk about Ontrack. Ontrack is another membership driven company, meaning you have to be a member of this, or your healthcare, like your insurance, has to be a member with Ontrack in order to receive this service. They have an interesting business premise. What they do is they use artificial intelligence, advanced data analytics, essentially, to identify people in their membership group who may have undiagnosed behavioral health conditions. How does that work? Well, an example would be that a patient who has diabetes is making frequent trips to the emergency department and is in insulin shock. And there may be some unknown other factors that are causing a patient to do that repeatedly, despite trying to have interventions. So what if Ontrack's data collection could identify that the patient has also had pancreatitis? And a risk factor for pancreatitis is excessive alcohol consumption. Of course, excessive alcohol consumption could be related to behavioral health problems. So that would be an example of how they go about identifying people who might need help. They then proactively reach out to the members who are enrolled in their company. They proactively reach out to someone. Can you imagine getting a phone call or an email or a text or some other way where a company is reaching out to you and saying, hey, we feel like you may have a problem that we can help intervene with? It might be a little disconcerting, but I doubt these people don't recognize that they have this problem, and I think that maybe having someone reach out to them proactively could be really beneficial. They then go about providing treatment for that behavioral health problem, and thus they reduce the expenses that a health insurance company might be paying out. So as an example, they list on their website this little vignette or study that they did with substance abuse, and they show that they enrolled 151 participants and there were almost 2,200 non-participants. And then after they've gone through their intervention, you can see that the cost of the claims for these patients goes down by 46% in the eligible participants, and costs went up in the non-eligible the eligible people who chose not to participate. So there's just an example of kind of how their business works. Let's talk about the financial end of this. How's the company doing? Well, they're still new at this, and they haven't yet started making a profit yet. But you can see that their numbers are going up. So if we look at the period ending June 30th of 2019, these numbers are in thousands, so this, where it says 17,000, would really be 17 million. In 2019, their revenue was 7 million at the end of June. However, in 2020, their revenue more than doubled there. Their cost of revenue did go up as well, and so their gross profit, you can see, is 7,350 times 1,000, so 7,350,000. Now, this is why the company's not making money yet. Of course, their operating expenses have also gone up, and so their operating loss hasn't changed really that much. That tends to happen, though, with new companies. New companies will not generate profits, sometimes for several years. But the encouraging thing here is the growth. If this continues to grow, you would expect that they will soon start to generate a profit. Now let's look at how their stock price has been doing. So you can see that over the last 6 months, the stock price has made a little run. Back here, July 7th, it was at $27.37. It's reached a high of about 78 or so during in-day trading, and it looks like the high of closing was at $74. And then it's come back a little bit into the $60, in the 60s to $70 range. What do I think about this? It may be a little overvalued at the moment, but I think that their growth potential is very high. I think the chance that this stock will continue to increase in price over the next year or two is significant. And I think the folks at, this is from Yahoo, Finance Yahoo, I think the folks at Yahoo kind of agree with that when they look at their long-term. This one shows over the next 9 months, the performance outlook is good. Something for you to think about, especially if this stock pulls back a little bit more in the next week or two. Certainly if it gets down into the 50s, I'm inclined to buy more of it. As I said, I've already bought some of this. I hope this was informative for you. The company has been doing. If you like what you see, go ahead and subscribe to our channel. If you have comments, please leave them below, and I'd be happy to take a look at them. Thanks.